Hi, welcome to an Easy Trader Update. This is Kim speaking on Wednesday the 15th of May. Okay, before I get stuck into the markets themselves, I just received an email this afternoon, or this morning should I say, from a colleague of ours. It forwarded it on. It's from a report it had seen in the Wall Street Journal. And it just said that the foreign exchange funds in general suffered their worst performance in April than they had for the previous 10 months. And it's mainly put down to the markets being frequently moved by central bank policies. Well, to be fair, I'm seeing a lot more markets being moved by the results that are coming out, the market reports that are coming out, as opposed to anything else. We are going through periods of just consolidation, chop, whatever you call it, what you may. But there are opportunities there. Now, I like trading the news and the news events again, since the markets actually started reacting to them. So for us, in fact, the fact that the markets have been as they have been, in the main, okay, there's a few times I'll miss out or lose on the trade itself for the news. But so frequently, if it's not the actual news trade that works, there's opportunities to make money just after the news, which happened today with the pound dollar. But the good thing is, I see it in terms of trading the markets, is that the results are actually moving the markets again, as opposed to at one point it seemed that whatever news came out, it didn't really make any difference. The markets were in a mind of their own. But now they seem to be reacting a little bit more, which makes trading news stories obviously much more fun and much more prosperous. Interesting fact that I've been probably trading, well, I know I've been trading far less, made far more, been sitting here very, very patiently for long periods of time, and so I've started adapting, even looking at some slightly different strategies, working on some different strategies, whilst the markets are very quiet, because at the end of the day, it's easy to make money when the markets are trending. Relatively easy to make money when the markets are trending. I'll be careful here. However, quite a lot of times, what we see is that the market will be sitting in a sideward chop, probably for about 60% of the time. The market's relatively choppy. And it's only around about 40% that it's actually moving really well. And in fact, if you analyze intraday movement in markets, you often see that, if I bring this down to a smaller time frame here, a 5-minute time frame, what might look not too bad at the end of the day, you may say, well, actually that moved 90 pips or 100 pips from the top to the bottom there. Quite often it's quite difficult to get into. I mean, okay, yes, you could say, well, it broke the lows there, so I'd have shorted it. Well, you'd have shorted it, got into a load of consolidation, okay, and eventually it moved. But they've not necessarily been the easiest markets to get into when they have moved. But when markets are like this, it's a case of adapting your style, being patient, trading often with smaller positions, and seeing what you can do. And certainly, as I said, the news events are helping us. Anyway, let's get on and have a look at what's actually happening in the markets. Now, I'm looking at the euro dollar here. What I might do is get rid of the bottom piece. We don't really need that on there. So there we go, so we can see a clear chart. And just want to go over a couple of different charts here. This is just, I'm looking at the dailies here, and the important thing to see is what we've what's happened. We've broken out. We've recently broken out of this sort of upward retracement trend, and it's obviously pulled back down here. Now we're seeing a bit of a bounce off this lower band. If I zoom out here into a monthly scene, you can see we're actually in this position here. Let me just get rid of that. That's it. And you can see we're actually in this sort of ascending channel moving upwards. Now there's a chance we could be breaking out the bottom of that. It's certainly a possibility from a monthly point of view. And in terms of chop, you can see, well, potentially over the last 3 months we haven't really moved too far with the euro, and it's quite good to come back to these charts to see, well, we are quite range bound, so we can look at these ranges that we're in, and they can actually help us analyze where we may get support resistance as we run through the months. Certainly this is a weekly picture, and we can see what's setting up here and what I'm quite interested in. Let me just see if I can get a drawing object. I can't get a drawing object to work here for a moment. I'll draw it on using a pencil here, but you can see, oh no, it's not going to work. In that case I won't do that. Is that going to be an extended? Alright, that's the one. You can see what I'm going to be talking about here, hopefully. It's a little old Head and Shoulders. Now we've got euro rushing off at the moment, but if it starts breaking down below the sort of neckline here, we could see a much bigger correction in the euro. Now that's not to mean to say it's going to happen, sorry about all the numbers and everything all over the place, but I just wanted to sort of highlight the Head and Shoulders that's sitting there on the weekly basis. Now when we drill down to the daily basis, we're also trying just running on this sort of lower trend line here, which I've drawn on here. Now we've seen a nice rally as it's bouncing off these sort of levels here, but if we can come back down to the daily point, you can see why it's bouncing off where it is. But certainly the trend to me is still relatively bearish. Now well, yes, we could argue we're still hanging in on this trend line here. It may keep in this sort of medium term upward trend or longer term upward trend, but it really is testing here. Now we've broken the more recent lows here, which again is bearish. It's also putting the lower high in, and so at the moment we're putting a series of lower highs in on the bigger time frames. When we look down them and pull down into the 4-hourly picture, and you can see this series of lower highs. Certainly we could get a decent rally within this range. As we're moving down, it has come off quite a bit over the last few days, and giving up the ghost a little bit. There's been quite a lot of positive US news, bearish Euro news, and so when you get this sort of situation, it gets a bit overstretched and we get a bit of a rebound. But what I'm looking at here in the longer term is possible further downside on the euro. Right, we just quickly come to a daily chart with the pivots, monthly pivots on, etc. And you can see here we've just on the monthly, from a daily point of view, we've just come down to the S1 area. Now we could get a bit more of a bounce off here, but it's all looking quite bearish. I mean, I've got some moving averages here. The 50 looks like it's trying to break through the 200 to the downside, which would be a bearish cross on this daily point of view. If we do get any sort of bigger rallies over the next day or two, I'd be watching for this daily 50 for a test of the daily 50 as possible resistance. Otherwise, really, my thoughts are really to the downside with the euro, and we could get a more prolonged period of that. Now, switching to cable, let's just come back out and look at the bigger time frames. We're going to start off looking from a monthly point of view. So there's a lot of going on here, but the most important thing I wanted you to see is we're relatively range bound and have been range bound on a monthly basis for some time. I'm going to switch this across to a weekly now, and you can see from the weekly there's the range bound area. We've sort of broken out, come back. We're testing the lows of that at the moment again. If it doesn't hold, I mean, to me it's looking bearish, because on the daily point of view, if I come zoom out to a daily, you can see we're breaking these low, breaking this trend. This ascending channel is broken. It really gives a target quite a bit lower yet. I mean, we've only done like a 50% we've done, coming down to the towards the 61.8 retrace. Could come down further yet. Let's just remove this. But it is looking relatively bearish to me from a daily point of view. We're seeing lots of things that are confirming it. So obviously we've broken the trend. However, once again, we sort of you'll get a few days down like this, and we may. That's not to say we won't get a bounce for a day or two, but certainly from what I'm seeing here, it's looking bearish. If you zoom down, actually, even shorter term time frames, and again you're seeing lots of lower highs confirmed and lower lows coming in. Now we could get, as I say, some sort of reversal from this. It's getting probably oversold in this time frames, but hence why we may get a bounce. We'll wait and see. It's broken through here. The important thing, it'd been testing the 50 MA. It's pulled up. It's tested it. We had an intraday bounce, which we expected yesterday. It then broke through, closed below it. At the moment, it's tested the upper side or the underside of 50 to a degree. To me, it looks like there's still potential for further downside here. As I say, because of what I'm talking about over the next few days, as such, because of this quite harsh sell-off we've had here, be no surprise to see a bit of a bounce, and it may be being overdone a little bit immediately. If you want to see a currency that you could argue has been overdone, certainly the Aussie dollar. Come back to the bigger picture quite quickly on this. I'm not going to dwell a long time, but I've been looking at this triangle on the monthly point of view. If we see the break of this low here, well, we could go for quite a correction down to the 85 area maybe. Certainly the 90 area would look like a reasonable target, if not down to the 85 area. So something to watch out for on the Aussie dollar. So it's the Aussie dollar stroke US dollar pairing here. One thing to watch, of course, the counter to that is we have had this huge sell-off all at one go. We could get a bit of a reversal and a pullback, so it'd be really a case of if it's actually going to break, eventually break from this triangle. Yes, it may get a rally back up, but I'd be watching for resistance levels. We may see a bit clearer on a daily point of view, so we may just sort of run back up to a key area where it be the S2 area may provide resistance, or slightly beyond. But it could certainly still have some downside with the Aussie dollar if it continues to break. We need clear reversal, otherwise if it to start getting long Aussie dollar again. Although we'll wait and see. For now, I remain quite bearish in the bigger picture. Looking at the yen next, then. Yen, we've seen the dollar yen, should I say, just to confirm what we're looking at here. We've seen new highs coming in here, but again, looking at the monthly perspective, it's so important to look at what's going on here, because historically, I'm just going to drag this back and watch my purple line. We have not spent a lot of time below the purple line on here. Historically, the yen has always been sold as a part of the carry trade because it covers no interest, and it's quite a nice carry trade. You can, if you've got a higher yielding interest rate, you can make money from the carry. So you sell the yen, buy the Aussie dollars. It was being one. It used to be the American dollar when it paid a good interest rate, and the amount of carry that was held on that for a long time was massive, and hence why the unwinding and the strength of the yen is partially because of that unwinding. But just purely looking at where we are now with the central intervention and the comments from the Japanese bank, etc., we've seen quite a good correction now. It's coming back into that normal zone. Now, this purple line did actually represent quite a key area of resistance. Now, it has broken that. Now, near term, it wasn't. You could say it wasn't resistance, but there are plenty of areas around about that level, which is just over the 100 point. Now, from a monthly point of view, it's looking good, and it could well continue. The only one thing that most people will say, looking at this, it's a bit steep, and that is what I'm looking at. And I'm thinking, well, if we do see any correction in a month or so, pulling back towards 95, I'll be buying. Certainly, if I can switch it to a weekly here, and you can see that there are potential divergences in that kicking into these sort of levels, but whilst it's going as it's going, the momentum's with the move to the upside. To me, the risk of selling short yen here, selling short dollar yen, is quite high, as opposed to buying. It seems that the path of least resistance is up at the moment. That's not to say we won't see a correction, and possibly a decent correction. I was hoping for it last week when it was moving around, or a few weeks ago rather, when it was moving around, hoping to get back to the 95 area. In fact, it seems like only last week at one point, and the earlier point, we was even then thinking about it actually. But as I say, moving up okay at the moment. So dollar yen still looks relatively bullish, although may get correction. A lot of these currencies are sitting around that point where you may get correction, so you've got to be careful. But certainly euro looks weak, the pound looks weak, the Aussie dollar still looks weak, although it could get a good correction, and the yen, as you're seeing here, with the dollar yen is looking strong and could continue to the upside. Okay, there's a bit of a longer range sort of forecast, or a bigger picture forecast. Hope you find it useful. Bye for now.